Well, turning now to some business news, and the markets have also been watching events in the United States closely on top of the latest movements related to that coronavirus outbreak. Our business editor Stephen Carl is here to bring us the latest. Stephen.
Eve, lots going on out there for investor to digest, but if we look at as results have been trickling in from the Democratic primary votes, we have seen movement on the futures markets. These are contracts which are bought and sold on the expectation of what the US markets will do when they open in about 5 hours' time. According to this measure, Wall Street is expected to open about 1% higher. Market watchers translating that as welcoming the results that Joe Biden got in the primary votes. He's seen as a more moderate choice by investors, partly because investors in some sectors, particularly in healthcare, have been worried about what Bernie Sanders as president would mean in terms of massive upheaval for that industry. Of course, we're a long way from the actual election in November, but that is where investors are thinking at this moment in time. Arguably, what's been even bigger news on the markets was the surprise rate cut by the Federal Reserve on Tuesday. The 0.5 percentage point reduction was meant to calm fears of the damage the coronavirus outbreak could do to the US economy. It is the biggest rate cut since the financial crisis, but US markets tumbled in response. Not the reaction the Fed chair was hoping for.
We don't think we have all the answers, but we do believe that our action will provide a meaningful boost to the economy. More specifically, it will support accommodative financial conditions and avoid a tightening of financial conditions, which can weigh on activity. And it will help boost household and business confidence.
So that move by the Federal Reserve bringing more worry than calm to US markets. This kind of move normally boosts stock markets, but the reaction, if you look at what's happening in Europe today, pretty tepid. No great direction coming from London, Paris, or Frankfurt, which are all pretty much trading flat. Of course, they had seen somewhat of a rebound yesterday in trading after the recent fears of the coronavirus outbreak. In Asia, a similar picture. Hong Kong and Tokyo both pretty flat as well. Some gains in Shanghai. The Kospi and Seoul, though, seeing gains of over 2%. And that's after South Korea's government is preparing to spend the equivalent of almost 9 billion euros in emergency stimulus to combat the effects of the outbreak of the virus on the economy there. It's almost 3 times the amount the government spent in reaction to the SARS epidemic in 2003. South Korea has seen more than 5,000 cases of the virus so far. Yuka Royer has more.
South Korean soldiers on the front line. The army has sent manpower to help mask manufacturers cope with heightened demand. With more than 5,300 cases, the country is the second most impacted by the coronavirus outbreak after China, and the government is pulling out all the financial stops.
We are putting all our policy focus on minimizing the economic fallout, especially for vulnerable sectors, small to medium-sized businesses and self-employed people.
The government is rolling out emergency measures to fight the virus outbreak. It's asking Parliament to approve a stimulus package of 11.7 trillion won, which would increase its already record-high budget for this year by more than 2%. The economy minister says the money will be channeled to the health system, childcare, and help for lower-paid workers. The world's 12th largest economy has been hit by supply disruptions as well as factory closures within the country. Shares in Hyundai Motors have dropped 17% in the last 3 weeks, and LG Display 14%. South Korea's central bank and the OECD have both downgraded the country's growth forecast for this year. President Moon Jae-in has declared that the entire country is at war with the coronavirus outbreak, as the government struggles to get the crisis under control before next month's general elections.
Amazon is stepping up efforts to combat price gouging on its site as sellers try to capitalize on fears over the virus. The online retail giant says it's removed tens of thousands of listings and was monitoring new posts more closely. That's as the price of things like face masks and hand sanitizer has reached hundreds of euros on the site. In a statement, Amazon said it was disappointed that what it called bad actors were attempting to artificially raise prices on basic products during a global health crisis. And finally for me, as people become more conscious of hygiene in public places, a French company has developed an antibacterial touchscreen. The So Clean screen uses ions of silver, which the company says kill 99.99% of bacteria, with protection lasting for up to 5 years. Comet Group has patented the technology and says the screens will sell for between €1,000 and €10,000. They're due to be presented at a trade fair in Paris later this month, a trade fair that for the moment, Eve, is still going ahead.
Okay, Stephen, thanks a lot for that. Stephen Carl there with our business update.